Hello, PMLA compliance enthusiasts. The financial institutions, DNFBPs and virtual digital asset service providers are obligated to comply with the Prevention of Money Laundering Act 2002. Along with guiding the reporting entities in identifying and mitigating the risk, the PMLA mandates the reporting entities to furnish specific reports with India's Financial Intelligence Unit. This video will discuss the various reporting requirements prescribed under PMLA. The first is the Cash Transaction Report or the CTR. As the name suggests, the CTR are used for intimating FIU about cash transactions. The reporting entities must furnish details of the cash transaction exceeding 10 lakh Indian rupees or its equivalent in foreign currency. While calculating this threshold of 10 lakh Indian rupees, the reporting entity must consider the series of integrally connected transactions conducted in a month where the aggregate value of all such transactions is more than 10 lakh Indian rupees or its equivalent in foreign currency. CTR is to be filed monthly by the 15th day of the following month. The second in line is the Property Transaction Report or the PTR. This report is used to provide details of the transaction related to the purchase or sale of the immovable property of 50 lakh Indian rupees or more, which is registered with the help of the reporting entity. The information regarding immovable property transactions should be furnished to fiu-ind every quarter by the 15th day of the month succeeding the quarter. The next report is the Cross-Border Wire Transfer Report, also known as CBWTR. CBWTR is used for reporting cross-border wire transfers of value exceeding 5 lakh Indian rupees or its equivalent in foreign currency. The details of the wire transfers are to be submitted with FIU only when either the funds originated from India or are destined for India. This report is to be filed with FIU every month by the 15th day of the following month. While submitting this report, the reporting entity must include information such as the wire transfer amount, the parties involved, corresponding account numbers, etc. The name of the next report gives away its purpose, Counterfeit Currency Report. The reporting entities must report the activities and transactions where forged or counterfeit currency notes or bank notes have been observed. This report should also be filed to furnish information about the transaction where any forgery of valuable security or documents has occurred to facilitate the transaction. The reporting entity must include information about the location where such counterfeit instruments were detected, confirmation whether the local police are informed about the same, and if the police are intimated, then the FIR reference number, etc. The reporting entity must file this report every month by the 15th day of the subsequent month. A non-profit organization transaction report or NTR is used for reporting the transactions involving receipts of funds by NPO of value exceeding 10 lakh Indian rupees or its equivalent in foreign currency. This reporting requirement is a measure to avoid misuse of the NPOs for laundering money or financing terrorist organizations. NTR is to be furnished on a monthly basis. Last but not the least is the Suspicious Transaction Report. STR is to be filed with the FIU for reporting any suspicious transaction or activity identified as being associated with proceeds of crime or terrorism financing. The reporting entities must furnish STR for any suspicions observed, irrespective of the transaction completion status or the value involved, whether executed in cash or otherwise. The STR must be filed immediately once the red flag suggests involvement in financial crime. Trust this video helps you with a comprehensive understanding of the reporting requirements under PMLA. Stay connected for more PMLA and IFSCA discussions to ensure timely compliance. Thank you.